Hello, welcome to another episode of DYOR's Crypto Alt Stars, where we discuss the safe and more well-known altcoins in the cryptoverse. Today, we're going to be talking about Avalanche. We're going to review the founder, we're going to see what Avalanche blockchain does, how it's unique from other blockchains, and we're going to check out a few projects in the ecosystem. So let's get to it. To start, we're going to take a look at the founder. Here is Emin Gunserer. I believe that's how that's pronounced. He's actually the founder and CEO of Avalabs, which is the company that produced Avalanche. And it's interesting, he's actually based in the United States. He's been working with Avalanche for 3 years, and his goal was to create a scalable blockchain, another Ethereum killer, if you will. One thing that's interesting on his LinkedIn is he mentions that they're hiring, and they have a link to a job board with all the jobs that are open at Avalabs. They're looking for business development associates, blockchain engineers, software engineers, senior IT systems administrators, finance, marketing, operations. So if you're looking for a legitimate blockchain company to work for, you might want to check out Avalanche. Let's get into what Avalanche is. So what is Avalanche? Avalanche is an up-and-coming blockchain in the DeFi space. It's a smart contract capable blockchain that's focused on transaction speed, low costs, and eco-friendliness. Avalanche really prides itself on the fast transactions, the fast TPS, transactions per second, that their blockchain offers. Ethereum apps hosting most of today's DeFi value are deploying layer 2 solutions such as Polygon, and Avalanche believes that they have a solution to this, to these side chains and these layer 2 solutions that they built into their Avalanche blockchain. The layer 2s, they take transactions away from the Ethereum mainnet, which opens it up to security flaws. You see things like bridges getting hacked, dApps getting hacked, and they're not actually on Ethereum, but it's part of an Ethereum bridge or an Ethereum sidechain. So Avalabs, the founders and developers of Avalanche, believe they built the fastest smart contract blockchain platform to date. And this is where it gets really interesting with their setup. They actually have 3 different blockchains. We'll get to that in a minute, but back to the founder, Dr. Emin Gunserer. He aimed to achieve the fastest time to finality. And that's basically your transaction time. From the time you send your transaction to the blockchain, it does the processing. The goal was to have the fastest finality, the fastest transaction completion time. And they're definitely up there. They have extremely fast transactions. But Avalanche's core innovation is that it is composed of 3 different blockchains rather than 1. And you'll notice this if you ever transact on Avalanche doing the different things. You can actually connect to their 3 different blockchains. When you work with Ethereum or you work with BNB, you only have to connect to the 1 blockchain. But with Avalanche, they have an X chain, which is their exchange blockchain. Does their consensus protocol, it create assets, allows users to exchange assets. So does some bridging, does the fees, takes care of the transaction fees. And then on the platform chain, it coordinates the validators for all 3 chains. It creates subnets, and those subnets are a huge deal for Avalanche. We're going to cover that later. That allows you to create entire custom blockchains built on Avalanche. It's kind of a networking term if you're familiar with IT or networking. You're creating a sub-network, and that's exactly what Avalanche is doing with their platform chain, their P chain. And then there's the contract chain, the C chain, which is the EVM. This is the Ethereum virtual machine. This is where you build smart contracts, you have tokenization, you can do things like NFTs, you can bridge ERC20 tokens, you can have dApps, and that's where all the fun happens. That's where all the TVL is. So let's go over each of the chains. The exchange chain, X chain, is responsible for creating and transacting Avalanche assets. Transactions on the X chain generate fees paid in Avax, similar to how gas fees are paid in Ethereum. When you go to make an Avalanche transaction, there's a fee. And that all happens on the exchange chain. The contract chain is a little different. That's where the EVM, Ethereum virtual machine compatibility comes in. That means these bigger companies, the DeFi titans such as Aave, can easily deploy a version of their smart contract on the Avalanche network. Another positive of the contract chain with the smart contracts are actually developed in Solidity, which is the same as Ethereum and BNB. It's a very popular smart contract coding language. Here's an example, Pragma Solidity. And then the third chain, platform chain, the P chain. This is where it allows anyone to create a layer 1 or layer 2 blockchain. And this is going to be the future for them. You develop these side blockchains called subnets where the P chain is, and the subnets are the key to scaling. So as everybody's really excited for Ethereum 2, Ethereum 2.0 introduces sharding, which is kind of a way to break down the blockchain into shards. That way it takes processing off the main chain. And that's kind of the way that the Avalanche subnets work. They have this side P chain where all the transactions happen for the subnets, and that frees up the transactions on the other two chains. And the crazy thing is the subnet creation is unlimited. The P chain can have roughly 4,500 transactions per second. That's about twice as fast as the Visa network. But it really doesn't have a practical TPS limit. The more subnets you have, the more transactions are, the faster the blockchain actually gets. Another cool thing about Avalanche is since it is Ethereum compatible, it uses Solidity, it uses the Ethereum virtual machine. They have Avalanche bridges for ERC20 tokens, so you can do things like bridge your USDC or your other Ethereum ERC20s over to Avalanche, and you can use them to enter into DeFi. You can utilize the smart contracts on the Avalanche networks with your tokens or your crypto from Ethereum. Then the baby of the Avalanche family is the Avax token. It is the native token. It's used as a medium of exchange. It pays for your transaction fees. Basically, Avax is a deflationary token, and part of those transaction fees are burned from supply permanently, lowering the amount of Avax in circulation. We know that's a good thing. It raises the price floor. It makes the price more volatile, hopefully to the upside. And with that Avax, you can do things like staking rewards. You use it to pay the fees, like I mentioned. And you can also, that's how you deploy smart contracts and create subnets. So the two central use cases are the custom tokens, which are the smart contracts, the fun tokens, and then the blockchain networks, which are the subnets. Developers can leverage these platforms to deploy NFTs, DeFi protocols, games, and on this extremely fast network, and it makes it feasible. You're not paying $50 to $100 when the network gets congested because of their 3 blockchain setup. It makes things more efficient, it makes the fees cheaper, and it makes everything much, much faster. That's one of the beautiful things about the Avalanche network. So let's get back. We're going to continue to talk about these chains. Basically, Avalanche is also, since it's Ethereum compatible, it's capable of hosting just about any Web3 protocol. Some of the bigger projects on Avalanche are Trader Joe, which is their Pancake Swap or Uniswap. They also have other dexes such as Sushi Swap, Paraswap, NFT marketplaces like the Tops NFTs, Curate, NiftyX Protocol. They have the big borrowing and lending platforms like Aave, Curve, Nexo, optimizing yield farms with Snowball and Yieldiac. So Avalanche is a big up-and-coming blockchain. Here you can take a look at their ecosystem. There's quite a bit of familiar projects in here. We see Chainlink, Aave, DYDX. We have the MetaMask wallet, the Coin98 wallet. There's all these different types of dexes, such as Sushi Swap, Trader Joe. You can use that for DeFi. They have the stable coins with the Tether and the USDT, and just in general, they have a lot going on their blockchain, and it's still fast, and it's a beautiful thing. So the big thing with Avalanche, since they do the smart contracts, they're a big player in DeFi. So if we come over here, we take a look at DeFi Llama. So we'll take a look at the top chains with total value locked. That's the amount of Avalanche locked into DeFi. Obviously, the biggest one is Ethereum. That's this brown area here. But Avalanche is creeping up there. It just recently passed Phantom and Solana. They're up to over 10 billion locked in with a 1.7 market cap over TVL ratio. It's very good. They're really close to passing BNB. So let's take a look at the projects that are on Avalanche. So here you can see the big players, which the big players are multi-chain. Aave's on Ethereum, Avalanche, Polygon. You have Curve, that's on a bunch of different blockchains, including Harmony, Polygon, Phantom, multi-chain. But then you have the ones that are native to Avalanche, such as Trader Joe. Trader Joe is their DEX, their swap, and it has the most TVL that's native to their chain with $1.4 billion locked in. They also have the Platypus Finance. They have the Benchi, which is another big one. And yeah, you can see it's steadily growing since last August. They continue to get more and more value locked. It's a good thing. So let's take a look at a few of the dApps on Avalanche. By far the most popular dApp is Trader Joe. This is Trader Joe. It's their decentralized exchange, or their DEX. And this is where you would take your Avalanche and you flip it over to USDC, or you trade it to enter in a smart contract. You send your Avalanche, you get tokens back, smart contract tokens on the Avalanche smart contracts. Their native token is actually called Joe. So let's take a look. One Avalanche is, right now it's worth about 76 Joes. They also have the liquidity pool where you can pair your Avax with USDC or USDT, and you earn yield. And you can see you're getting 8%, 8%, 3%, 9% on Joe and Avax. So they also do yield farming, where you can actually farm your LP tokens from the liquidity pool, and that's where the APRs start to get a little crazy. You see your AVAX and VTX is getting 324%. The AVAX and DFiat is getting almost 1,000% total APR. I mean, it's definitely becoming a very popular. These farms alone almost have $1 billion locked in, and you can see why. I mean, these APRs are pretty up there. People like that yield, and they want to earn that yield to make their money work for them. That's what makes Trader Joe popular, has the most total value locked for a native DEX on the Avalanche blockchain. Another good project on the Avalanche blockchain is Benchi. They have around $2.5 billion locked in, and they do a lot of different things with the liquidity. They have an algorithmic liquidity market. They have liquid staking. And the APYs are a little less than something like Trader Joe, but it's also more stable. With the algorithm, it keeps the APY consistent. You're more so getting what you expect rather than the APY and the prices swinging wildly. I mean, you can stake your Tether, you can stake your USDC, and you're getting 6% on Tether USDT on Benchi. Compare that to any bank or any financial institution. Right now, you're going to be lucky to find 1%. But with Benchi, you can stake the US dollar coin or USDT and get 5 or 6% APY. It's kind of a no-brainer. So to wrap things up, we're going to take a look at the Avax chart. Here's the Avax chart on Binance for Tether US on the daily. Avax started trading on Binance in late September, right around when it launched. And as you can see, it's had a huge run-up. It launched right around 85 cents, and at its all-time high was $147. You can see this type of price range from the high to the low. You're looking at almost a 19,000% increase. It did have kind of a consolidation when the market took a downturn at the end of 2022, December, January. Currently, it's trading at $71. It's being held up by a strong support right around $70. We have a nice consolidation happening here on the daily, and I am very bullish on Avalanche. They definitely came up with some original ideas on how to scale the blockchain, something that Ethereum and other blockchains are having a tough time with their single chain. By running these 3 concurrent blockchains and having the ability to make subnets or side blockchains on its own chain on Avalanche is truly an innovative idea, innovative approach, and the price of the coin is reflecting that. So that's about all I have for Avalanche. Definitely check it out. Check out Trader Joe. Check out Benchi. And as always, do your own research.
All right, ladies and gentlemen. Oh, I got that totally blown there. The transition. Nice, Tom. Nice. Let's get that one right here. There we go. I got the other one messed up now. Well, that was good. That was a good summary by Wes there for Avalanche. I'm going to take a minute here before I switch over to the Late Night with Striking show and bring on Blake from Military Finance as our guest tonight. I just need to switch up our YouTube, Twitch, Facebook streams into the new streams, and we'll be right with you. So the people on Telegram, this will be seamless to you. I'll just be sitting here staring at the screen. And for those of you that are on YouTube, Twitch, and Facebook, stand by, and your screen will say, will you move to the next stream, Late Night with Striking? And choose yes.